Hi guys, Mike here. Hope all of you are doing well. It's been a little while since I've shot a video, so I thought it'd be a good time to shoot a video regarding the uranium industry and the potential for the uranium industry and nuclear energy to grow in the near term, and why I think this could be one of the best investments that you could make. My name is Michael Hernik. If you haven't heard of me, I have a YouTube and a Facebook page called The Financial Mechanic, where I talk about economics, money, finance, and really giving you as much information and value as possible in your financial education and knowledge. So please share, comment, and let me know if you want me to comment on any particular topic. I would love to hear from you, and I'm always looking for different video and topic ideas. So let's jump in. Why is uranium something to pay close attention to, and why could this be, no pun intended, an explosive investment? Here's why. So there's three main reasons. First of all, before we jump in, what is uranium and what is it used for? Many people actually don't know. Uranium is used for nuclear energy, and nuclear energy effectively has produced base load power globally. So let's jump into the reasons. Number one is the supply and demand fundamentals with uranium. I posted a piece on this a while ago in my Facebook page, but given the recent pullback in the stocks and equities, now is a good time to start looking at this if this is something that interests you. Again, no investment advice. This is purely for educational purposes. So number one is the supply and demand fundamentals. So what happened in the uranium industry was, back in the early 2000s, there was a shortage of uranium, and the price went from $8 a pound to about $140 a pound. So what that means is basically a lot of producing companies started to produce, and there was excess inventories. Fast forward now 15 years, 2021, now we've kind of consumed all of this sort of quote unquote excess uranium. Again, the nuclear plants and the reactors have consumed all of this, and there is much less inventory, to a point where now we have supply deficits, but the demand is still there, which is really interesting. And the demand comes from really the nuclear reactors and utility companies that need the uranium to produce the power. So the supply demand fundamentals are extremely tight right now. I believe they make 120 million pounds of uranium per year, and we need about 180. So there's about a 50-60 million pound deficit that's going to continue year over year over year. Yet, when demand is still going to increase, even though supply isn't there. And what has also happened is we have Cameco, which is actually a uranium producer, one of the biggest in the world, who has now closed McArthur River years ago, which has historically given a lot of production into the uranium industry. That's off production. Cigar Lake was off production as well, because of the COVID shutdowns and the pandemic, and now they're back online, but the production is still at deficit levels. So what that means is the demand exceeds supply, which means there's basically one thing that can happen to prices, and they will go up. They have to go up. So that's number one. Number two is the pricing, and why the price of uranium has to go up. So right now the price of uranium is about $32.40 US per pound, okay? According to researchers and analysts, the actual cost to produce uranium, i.e. to actually get it out of the ground, and the full out cost, including all of your prior year reserves and so on, is about $50 to $60 US per pound. So what that means is that the price to produce uranium actually exceeds the current market price. So what does that mean will happen to prices eventually? They're basically set to explode, with no pun intended. Why? Basically, you have producers that are losing money on production, yet our demand and need for uranium to fuel the nuclear power plants is still there, and it's going to continue to increase. What happened in the early 2000s is uranium had this very similar fundamentals, where the price at that time was $8 a pound, and there were shortages. And because of the shortages and the illiquidity of the actual uranium market, it drove prices from $8 a pound to all the way up to $140 a pound. which is absolutely insane. You don't see these type of parabolic moves in any other commodity. You may have noticed that oil has been increasing. You're going to continue to see oil prices rise, but they're already at like $74, $75 a barrel. You saw lumber prices that they've corrected a little bit now, and agricultural commodities all going up, 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 up. Uranium hasn't really gone up much recently, even though the supply-demand fundamentals still exist and are getting tighter and tighter. So that's number two. Number three is actually kind of going back to number one, which is that nuclear energy makes up about 10 to 15% of base load energy globally. What that means is that we have nuclear reactors all around the world, in the US, in Canada as well. Many people don't know. We have several in Ontario, many in Europe, Japan, China, etc., all around the world that need uranium. And ultimately, that 10 to 15% base load power means that these nuclear power plants, regardless of price, need uranium to actually to produce power. So what that means is that what happened in the early 2000s is these utility companies that, effectively need uranium to throw them into the nuclear reactors, had to pay higher prices because there was a shortage of supply. So that's why the price went up, because all these utility companies like, oh shoot, we don't have enough uranium, but we need uranium, or else what happens? The lights glow. Ultimately, this is a common phrase that one of the speculators in this industry, Rick Rule, says. That's his phrase, is that either the price of uranium has to increase or the lights go out. And this is so fundamentally true, and it's a really niche industry. And what people don't also realize is that on a market capitalization basis, uranium stocks make up about, I believe, $15 to $25 billion, which sounds like a lot, but really is peanuts. And what that means is that when institutional investors, hedge funds, want to get in and get a part of the action, if the price does rise, these stocks go absolutely insane and go parabolically up. Now, the thing to remember though is that because it's such a small market and such a small industry, there's not many companies in here. And this is also why I love the uranium play and the thesis around it, because there's really about 60 companies in the uranium industry, and probably out of those 60, there's maybe 10 or 12 worth even investing in. And unlike gold, unlike silver, unlike lumber producers, unlike oil producers where you have hundreds if not thousands of companies that you can really invest in, uranium only has maybe a dozen worthwhile even looking at. And that means basically when the uranium price goes up, it's like trying to get, I guess a good analogy for us in Saskatchewan would be like Gardner Dam to go through like a garden hose. That's the type of interest that will happen. And really, because there's a few number of stocks available, they're going to go through the roof. And right now what has happened is the uranium stocks have actually been, somewhat overvalued over the last 2, 3, 4 months, but they've come down tremendously now. And this is why I wanted to shoot this video. I was actually waiting to shoot this video later on until I saw a really good time to buy in. And now it looks like the prices it's worth looking at, let's put it that way. And it's something that I'm personally invested in. It's an extremely volatile sector. The stocks can go up 30% one day, they can go down 30% one day. But if you understand the underlying thesis and the fundamentals of the supply demand, that the price to produce exceeds the actual market value, it's more of a question of when will the prices go up rather than if the prices will go up. So this is something that if that interests you, take a look at this. I think, even though the stock market and everything's overvalued, this is probably one of the only areas that I would see the most potential in. Now, obviously, some of the things that could derail this type of thesis are, a nuclear accident, forbid that were to happen, or the supply and demand fundamentals were to drag out a little bit longer. But one nuclear accident happening, highly unlikely. Nuclear energy is very safe now, despite people not really having a good understanding of it. Produces very clean, carbon-free energy. That's another thing I didn't even mention, is that it's basically carbon-free energy, and it has gained a lot of support even from the environmental groups, not all, but ones that actually understand the value that nuclear energy can produce and provide. It's a green play as well, which is excellent. So it's an industry that I encourage you all to look at urgently, sooner rather than later, because the supply fundamentals and the demand fundamentals are getting tighter and tighter and tighter, and we're at a point where the price of uranium is about $32. If the price were to go up even to 50 or 60, we would see significant increases in the stocks. And it's one of those plays that if you're patient, this could be a 3, 4, 5 year wait. But again, if you understand the thesis, in my opinion, it's a when, not if question. So anyway, if you found this video helpful, click like, comment below. Do you think this is, what do you guys think about this? Do you want me to speak more about this? I'd be happy to share, what I'm doing in this space, but I thought I'd put the bug in your guys' ears to at least take a look, because it's worth looking at. Okay. Again, if you like the content, please click like, share it. We'd love to hear from you. Comment below. Again, we'll see you guys in the next video. Have a great day. Stay cool and stay out of the smoke as well. And we'll see you guys in the next video. Take care.